What's up, everyone? Excited to give you this video today about SoundHound AI, which has major news today. So first off, this is not financial advice, so please do research in D&D. But the company has been added to the Russell 2000 and the Russell 3000 index. This is a major development for the stock. This is gigantic. So just to tell you why this matters. So passive indexers are investors that buy exactly what an index is. So if you're a passive indexer and you mirror the S&P 500, you buy exactly what the S&P 500 buys. If you're a passive indexer and you mirror the Russell 2000 or the 3000, you buy exactly what the Russell 2000 or 3000 buys. So this is going to have a massive snowball effect where all these passive managers who mirror the Russell 2000 will have to buy SoundHound AI. It won't be a choice for them. It's not going to be, oh, I like the stock, so I'll buy it. No, it is simply just matching the index that you aim to mirror. So this is huge. I mean, with the rise in passive indexing and passive management in general, this is going to give a floor for SoundHound AI shares for the foreseeable future. So I really think this can't be understated in how, can't be overstated in how important this index inclusion is. And really, it will be something that I think we look back on this day for the stock, look back and say, wow, that was really the first day that we got massive adoption throughout the market. So I think institutions will likely pile into this stock. Like I said, this is just huge. But with that being said, you understand the news. Let's jump into the chart and try to give a price prediction for shares. So in terms of what's already happened today, so it looks like we've topped out at about 450, which is where shares had topped out in June, late June, obviously just last week on Thursday. It's also where shares had topped out in February 23rd to be exact. So this 450 level seems to be acting as pretty firm resistance for shares. So definitely be on the lookout for that level. And then in terms of longer term resistance, so this $4.03 level is where shares are basically sitting right now. And also on Thursday, we obviously moved higher up to 450, pulled back, but we closed below this $4.03 level. It looks like we'll close below this level once again. And this level is where shares had consistently topped out in February as well, moving above it but closing below it. And so the last time we were at 450, we moved up to 450 in February and we closed below this level. So it seems as if the last three times we're going to touch this 450 level, we'll end up closing below this this $4 level. So this $4 resistance level seems pretty firm, just like the 450. They all seem like levels in which sellers are coming into the market. So definitely be cognizant of that. And in terms of RSI, the stock is overbought currently, according to RSI, which tends to lead to some downside for the stock. So the last time shares were overbought was in February, and obviously the stock moved lower, and then we became overbought on February 23rd and then moved lower as well over the coming weeks. So it doesn't always work, obviously, but it's definitely worth noting that the stock is overbought and we just rejected resistance. Obviously, I think this index inclusion is great news for shares, right? For the company as a whole. But if I were just looking at the chart from a technical standpoint, I do think it's likely that we likely move down to these moving averages at about $3 over the coming weeks. And we could get a continuation of this breakout, but from where I sit with rejecting this major resistance level, and we're kind of overbought, not kind of, but we are overbought according to RSI. I believe that could lead to a drop over the coming weeks down to the moving averages at about $3. And then in terms of momentum, we did get a very bullish sign of momentum in late May. So we got the 50-day moving average crossing above the 200-day moving average, which is a sign of bullish momentum. It's actually called a golden cross and is definitely the most watched kind of moving average signal out there. So bullish momentum looks like we're kind of rejecting this resistance level at $4.05 and then at, 4.50. So given these two rejections, I do think, and when you add up the overbought conditions, I do think we likely move lower over the coming weeks. Keep in mind, I'd like to be wrong. I'm a long-term shareholder. I'm bullish this stock long-term fundamentally, for the reasons I'll state later in the video. But yeah, that's generally my price prediction, is that we move lower and then likely continue this uptrend, to about $5. That would be kind of my prediction over the next couple months. Obviously, things could change. We are a bit beholden to the general market now, especially given the stock is in an index now. You're going to see some selling and buying based on the movements of that index, right? So, be cognizant of that. But my official price prediction is we move lower, come down to the moving averages around 3. I don't know if it'll be exactly 3, right? I'm not a magician here. Do your own research in D&D. But from where I sit, it seems like we'll likely move down to the moving averages around $3 and then continue higher to $5 over the coming months. So with that being said, I will jump into the fundamentals of the company, which I covered in a... First off, whenever we're looking at a highly traded retail stock, we need to be looking at what people are searching, what people are Googling, how often they are Googling this stock. So this term, obviously the ticker here, then stock, topped out in terms of search volume earlier this year. And now we're just trading at 61% of that peak volume. So search volume, retail chatter, that could all really see a resurgence here, which would obviously be a bullish catalyst for the stock. So my point in bringing this up is basically saying that we have more room to run in terms of retail chatter, retail excitement, which obviously pushes smaller cap stocks like this one higher. So still more upside to be had in terms of search trends and retail chatter. And then when we look at short interest, one thing that I thought was interesting was we saw a decrease in shorts by about 10% over the last short interest period, which was about a week ago. So good to see that the shorts are being forced out. That's good. Still a high short interest, though. Almost 10% of the stock's float is sold short. So there could still be, somewhat of a short squeeze over the coming weeks. But I wouldn't put this stock at high likelihood for a major short squeeze just because days to cover is 1.1. And for those that don't know, days to cover simply means that it takes 1.1 average daily volume to cover all shorts. So not huge there. It wouldn't cause a major move, a major quick move in the stock if all the shorts covered right away, but obviously it would be a bullish thing, and over 10% float being shorted is nothing to sneeze at either. So decent short interest, but I wouldn't say it's at a high likelihood for a short squeeze. And then when we look more fundamentally at the company, so I wanted to highlight this recent article, which actually came out just yesterday by Joffrey Seltzer. Shout out to the Game of Thrones fans with the Joffrey. But I'll read a couple good quotes from this. So just for those that don't know, SoUN has a voice AI platform that helps with human-computer interactions by allowing people to have more conversational, natural interactions when dealing with things like voice-enabled third-party assistants. Its speech-to-meaning technology combines automatic speech recognition with natural language understanding to convert speech into meaning in real time. the platform's deep meaning understanding technology also allows its platform to understand complex questions. So if you're watching this video, you likely already know what the stock's about. If you don't, there you go. That's why it's called SoundHound AI, is because it basically just helps out with human to AI interaction. So pretty cool stuff. But let's get into a couple more important notes. So Sound saw its revenue jump 56% to 6.7 million in Q1. However, that's off of a very low base and was just in line with expectations. So don't be misled by this number here. Now, undoubtedly there is some seasonality in these numbers, but for a company that should be at the early stages of growth, the 1% sequential bookings growth and deceleration of other growth trends are a bit concerning. In addition, its revenue forecasts continue to come down. For next quarter, analyst expectations are down 50%. So, as you can see through this chart right here, analyst expectations have come down drastically, which should obviously hurt shares, but at the same time, it does allow the company, the ability to outperform these expectations given they are so low. So it really depends on how you look at it. Obviously, these numbers should be baked into the stock, assuming people know about it. It's such a highly retail traded name that many uninformed investors may be, kind of overlooking some of these stats, which is also why I wanted to put a video out about this stock. So they also added a Turkish EV maker to their portfolio of companies and customers, bringing its total up to 10 auto brands. So 10 different auto brands use SoundHound AI's AI technology to communicate with its system. So very good to see that there. And they're also huge in the POS restaurant system as well. So in terms of valuation, this is pretty important. So Sound is projected to grow revenue 45% to 44 million. On that basis, the stock trades at a price to sales multiple of 16 times. So it's pretty notable that the growth projections have come down a lot for next year, but that hasn't led to the stock moving lower. In fact, shares have moved much higher, and they're actually outperforming peers. So we're outperforming C3AI. We're outperforming these two smaller cap names here. But in terms of valuation, we're actually way more expensive. So it's really not the best thing to see here, that valuation is much more expensive than these two peers. And we also are trading near AI in terms of valuation, but the stock price has outperformed all these stocks. So obviously outperformance, after you've experienced it, with shares, it obviously is nice to experience in the moment, but it could also lead to underperformance, let's say, if the sector trend flips. So be wary of that. Be cautious. Take profits. Please take profits if you've ridden this wave. Take some profits. Take your cost basis out. It's not going to kill you. No one ever went broke taking a profit. My favorite Warren Buffett quote. But with that being said, keep this chart in mind. It's not irrelevant. It's not the end all be all, but keep it in mind. So with that being said, I will jump into some numbers here. So not much to go off of. Obviously, price to sales way above the sector median. So not much to go off of there. And then revenue growth year over year looks great, obviously. So that is 54% growth. And anytime you have a stock that isn't profitable, you always want to see high growth numbers to rationalize that valuation, right? So the high growth number of 54% year over year looks great, but obviously, as we just talked about, it's not listed here, but the growth expectations for the stock have come down a lot. So be cautious of that there. And then in terms of gross profit margin, this looks very, very nice. So Their gross profit margin of 70% is well above the sector median at 49%. So for those that don't know, basically gross profit margin tells you how much you're making when you're selling products. So but it doesn't encapsulate the full cost of selling products like patent technology, other things as well. But just to give an example, for this 70% gross profit margin, let's say I own a lemonade stand and I am charging $1. Let's say I'm charging $1 for lemonade, but it only costs me 30 cents to make the lemonade when you factor in the cost of goods sold and paying the person who's handing out the lemonade, which would be included in cost of goods sold. I'm selling it for 70 cents. I'm making 70 cents each lemonade cup I sell. That would be a gross profit margin of 70%, and that doesn't encapsulate taxes, property, other things as well. So it doesn't encapsulate everything that goes into running a business, although it tells you how much you're making when you're selling the product. It's basically simply revenue minus cost of goods sold. So 70 looks great, but we need more growth for this profit margin to really start to make us some money in the stock and have the company turn profitable. So we need to turn this gross profit margin into profits through increases in growth, which we should be seeing hopefully soon, although obviously expectations have dropped. And like I said, expectations have been brought down by covering analysts. So there's been two revenue drops over the past 3 months from analysts, and then one EPS downgrade over the past 3 months. And there isn't a single analyst out there that is bringing their EPS and revenue expectations up for the stock. So it seems as if Wall Street is becoming more and more bearish on shares. But with that being said, I hope you enjoyed the video. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.